Yeah, I'm going to put forth this assertion that QE actually has never stopped. And I don't know if anybody's putting this out as this way, but there's a big, obvious, it's glaring right in your face. You know, first off, you know, like the QE, well, it hasn't stopped, but you know, they say they're slowing it down, they're backing it back and down, they're backing down, but not at all. And here's the big glaring fact. Now, you notice like China has said they're not going to be buying any more of the bonds, they're not buying any more U.S. debt, and yet they went by the Russian recommendation to lighten up on the U.S. debt. So you're thinking, wow, hey, you know, who's going to be buying the debt? If nobody buys the debt, the interest rates go up to entice people to buy it, right? That's usually what happens. You know, that's why the interest rates on the Greek bonds were so high, because nobody wanted it. So if you're not selling, so that's, you know, that's the whole premise on QE, basically quantitative easing, is keep those interest rates low. So like the government itself was buying the debt, right? Well, it turns out there was a new European buyer that was taking up the slack for China, Belgium. But the thing is, Belgium don't have the money to be buying that kind of debt. So some other buyer behind the scenes is actually doing it. And we know, if you, I mean, it's not going to take Sherlock Holmes to figure out who it is. It's the U.S. government itself, right? Now, I'm not, you know, the thing is, it's, the game that actually goes on, actually, with this thing is last man standing. You know, you can look and focus in on, you know, think of like the United States as a business, Europe as European Union as a business, Japan as a business, the Middle East as a business, China as a business, and Russia as a business. And I know I'm leaving stuff out, but they all have problems, and they don't advertise their problems, right? It comes up to last man standing. It's almost like the automotive industry at the turn of the century. You know, 10 or 15 automotive companies were going out of business every year. Then we wind up with the big four, and we wind up with the big three, and you know, basically now it's the big two, and you know, I mean, but that's basically what's going on. You see, even though the United States is having problems, you know, there's a lot more debt problems in Japan, and I know you could point to certain figures in the United States that look worse, but it's, you know, China's got problems, and you cannot just replace a world reserve currency overnight. For instance, actually, I'm going to tell you honestly, if the dollar goes down, you know, this sounds almost ludicrous on the surface from what people have been taught about with silver and gold and everything, but if the dollar went down a lot, the one major currency that would actually go up a lot, despite all their freaking crazy problems, would be the euro. Believe it or not, it's not going to go away that easy. It's almost like there's a it's not exactly, but it's almost like a semi-inverse relationship between the two. As a matter of fact, in 2008, before the bubble burst on, you know, silver was up to 2022 and oil hit like 147. The euro was flying high at, was it 150 or something? And everybody was thinking, oh yeah, everything's going into the euro. And the dollar looked bad, and then all of a sudden it just went, and actually there was an attack, concerted attack on the euro. But there is a lot of intramural competition going on here, and it's basically the center, in other words, capital and people's money and you know, not just people, but you know, the big players' money and the big industries' money and the government's money all goes to the place of where they perceive the most safety. Right now, I guess the dollar's flying high because of also the historical safety of the dollar, but also it's a matter of last man standing. You know, there's you could pick apart every economy out there. Now, actually, in the case of Russia, yeah, they get lightened up on the U.S. debt, but actually their markets have been going down the last couple of years. The rubles have been going down the last couple of years. They're not doing that great. The oil, and actually, I think they're actually depressing. You know, the Western powers are keeping the oil prices down because that'll actually line Putin and Russia's pockets. And they don't want the markets to go down here in the West because that's going to be a major, you know, propaganda thing for, you know, Vladimir Putin, whatever. Because now it looks like the Western oligarchy considers Vladimir Putin as not playing ball, and basically, He's his own thing. He's his own oligarch. He's his own crook. He's his own banker. You know, he's got Gunvor in Switzerland, and he trades the oil and the oil trading commodities. Basically, if you have any profits on that, it's all registered in Cyprus, so there's no taxation on capital gains. So they got real relaxed laws on that. That's why this guy's got more money than Warren Buffett, more than likely. But I don't know why people worship this guy, and they you know, they're all the same damn thing, different flavor. But Warren Buffett, actually, I only read this one time. He actually, as of what it was last year, it was only one time I saw it. He didn't mention it a lot. He doesn't go around like saying the sky's falling every day. He actually has more of his, as far as his liquid currencies, he has them more in foreign currencies than the U.S. dollar. First time he's had it that way in years. So it's like a pendulum. You know, the pendulum is swinging. It's not going to mean like the end of the dollar. It's probably going to be swinging this way, you know, where the dollar's going to start losing a lot of its clout. And then at one point in time, there's going to be a spring back because there's going to be problems on the other side of the world. The Chinese yuan can't replace the dollar as the world reserve currency right now at all. No way. Not, you know, it's not even remotely true in the next couple of years even. So, I mean, you know, when people put out, there's nothing actually that can replace the U.S. dollar as a world reserve currency right away. Nothing. So, actually, the number 2 currency out there is the euro, even though it's got all these problems. If the dollar starts going down, you're going to see the euro go up. It's almost like you're thinking it's going to fall apart, and everybody's telling you it's probably not going to fall apart. There's going to be, even if some countries left the euro, you know, it's not going to be falling apart because it's just held together by law, I guess, or whatever, by axioms, you know. And no matter how you figure things, you know, actually, no business actually has all their money in currency. They actually only have a small portion of their assets in currency. You know, it's almost ludicrous to think that if you sold hard assets or whatever, gold, not now. I mean, it's maybe a little lower, but you don't want to be selling gold and silver at this time because actually, I said this before, it's like if you look at a long-term aggregate of the MACD, and I put this video out with the MACDs and stuff so people pay attention to it, but the MACD is actually showing long-term trends as gold has be a buy, and that hasn't happened where, you know, it first started being a buy again in 2009. It's not. It's definitely a buy now. So, I mean, it doesn't mean, what it means is you don't pour all your money into it, but if you have it, don't like panic sell now. You know, it could go lower, but you know, there's so many unpredictable events in the Middle East and in Ukraine that one thing could drive these prices up pretty fast. But I think the West does not want to drive up the price of oil because of that would actually line the pockets of Vladimir Putin. So, like, the West has this dilemma. You know, they're considering this guy an adversary because, and you know, I get annoyed with people trying to run to this guy like he's the solution. He's not. He's just another. It's like you got 2 gangs or 3 gangs in the world or 4 gangs, and none of these gangs are good. You know, all these elitists are bad. They're not like you take the one guy's. Think for yourself and do your own thing, and that's it. But I just want to point out again, they really did not back off QE because when Belgium took up the slack for buying the bonds, they don't have the money to buy all those bonds like they bought. I forgot the figures. You know, I read so much, and actually I can actually put out about 7 videos a day. I just can't convert them over fast enough and upload them fast enough and piece them together fast enough to actually do it. I mean, I got so many topics I want to go over that are not just in this economic area that actually are not on YouTube, and I think would be beneficial to people. And I'm not pulling out the same rehash of what other people do. I have my own ideas, and I have well-researched ideas. The problem is I can't get these videos out fast enough, man. It's like, damn, man. It's like, no matter how fast a computer I have, it takes a long time to process these damn things in 1080 or whatever the hell they are. So, just want to tell you, though, that do not go along with the conspiracy clowns where the dollar's going to nothing. It's not going to happen. It's going to be a pendulum. It's going to swing, and actually as the pendulum swings up, it's going to kind of maybe move a little faster or something like that, especially with the silver and gold. But then it'll swing the other way. So you want to catch the pendulum at the right side, you know. Right now, I mean, I know people be getting vastly discouraged with gold and silver, but it's, you know, the way I'm looking at it, I said that September 2015 is going to be the bottom of the next financial crisis. And I'm going too long on this damn thing, but I got to rehash this stuff. Also, that George Soros is going to start losing out some of his short position before January 2015. So he's going to start losing some of those options. Some of those options are going to expire. But he actually added to them in August 2014, and also at the beginning of 2014. But the ones he did in August 2013, some of those that was a huge position. 16% of his net worth is in a short position on the S&P. Now, you don't like the guy, fine. I mean, Buffett and Soros, I'm not saying I like them. I'm just saying, when you got to look at what they do with their money, and not what they say. Okay, when they're actually not. I mean, I'm talking about a very significant portion of their money, and actually, it's common sense. I mean, you could see, but that doesn't mean the United States is going to fall apart. Russia would love that. You know, they would love that. Actually, we're more unified over here in the United States than Russia is unified over there. They got far more problems actually with cultures that could possibly clash, and you're being held together by an image of Vladimir Putin right now and a strong arm. I don't think actually everybody in Russia's behind him, but they can't voice their opinion or else the reporter disappears, you know what I mean? And over here in the United States, we could throw all kinds of dirt at people if we want to, but and I know there is a lot of dissatisfaction, but it's like it's the fact that we have the ability to voice our dissatisfaction is what makes the United States a lot more unique than China or Russia. Okay? Anyway, that's enough on this subject, but I just want to tell you again that QE really never has stopped. QE is actually going on through the back door through Belgium right now, probably full steam ahead. That means they're having problems, man. They're not going to be able to keep adding this. It's not going to go on forever. I mean, I don't know how many rabbits they can pull out of the hat. It's not going to implode overnight, but it's not going to last forever. It's not going to last forever. Anyway, just want to point this out because a lot of people are saying QE is being backed off. It's not. It's still the metals aren't going up, right? But like I said, I think the real key to the metals going up is, if you look historically, Middle East, the unpredictable Middle East. You know, I can't figure out the Middle East. Nobody can figure out the Middle East. It's like when the Middle East really has a serious blow-up war, and it kind of looks like it's going to happen, but every time it kind of looks like it happens, it doesn't happen. That's when oil, gold, and silver will take off. That may happen. That may happen soon, and if it happens, things can change overnight. That's where all the mathematical calculations and the charts get thrown out the door because something, another big event occurred. So hang on to your investment. It is a buy right now, and the U.S. dollar is in trouble, but it's never going to. I'm not going to say it's never going to go away. I'm not talking about it's not going to go away over the next several years. I'll guarantee you that. Over now.